Hello and welcome back to Go ESG ASEAN Corporate Sustainability Virtual Summit 2020. Again, my name is Rahim Rahman and welcome back. And before we dive into the second panel session, I would like to inform and of course remind all the participants that you can actually interact and engage with the panelists during this session by using the button at the bottom right of your screen. And you can also submit questions via the link www.menti.com and using the code, let me just read out the code, it's 900834. That's the code that you need to use to ask questions, to submit your questions. It's 900834, and depending on the time, there might not be enough time to answer all of your questions, but we will select and post it to the moderator to present the questions to all the panelists. Yeah. So once again, another reminder to all the participants that now and then, please do refresh your web browser periodically, and then to ensure that you get a smooth and a good reception of the panel session. Right, and having said that, without further ado, let's move on to the second panel session, another interesting topic, which is tapping the new sustainable finance frontier. And without further ado, I would like to introduce the moderator for this session. It's Ms. Sharifah Najwa Said Abu Bakar, Chief Officer, Knowledge Management and Strategy Division, SME Corp Malaysia. Over to you, Ms. Sharifah Najwa.
Thank you, Rahim. Thanks, and welcome back to all the participants. In this session, we will hear about quite a variety of sources of sustainable finance, which can promote and support the flow of financial instruments and related services towards the development and implementation of sustainable business models, investments, trade, economic, environmental and social projects. Let me start by introducing the panelists that will be joining us today. First of all, we have Mr. Aiman Dukali, Head of Structuring, HSBC Amanah Bank Malaysia Berhad. Then we have Ms. Rita Jaafar, CEO of TFX. Mr. Gurpreet Kira, Head of Strategy and Partnership Aspirasi, Axiata Digital. And Ms. Lani Haryati, Country Program Manager, GRI Indonesia. Welcome, everyone. If I can just, because not all the organization that you're representing are conventional financial platform. So if I can just let you briefly, each of you, and to actually describe the organization that you're representing very briefly. And Lani, we would really appreciate you describing, briefly the general rule of GRI Indonesia in this aspect. Thank you.
Okay, thank you, Sharifah. So I will start. So hello everyone. So my name is Lani. I'm from the Global Reporting Initiative. We are based in Amsterdam. We produce the sustainability reporting standard for corporations. You as a small medium enterprise, actually you can use the GRI standard too. In Indonesia, and I think coming up soon, covering Asian, we are going to be supported by the government who works with SME level to bring them the capacity to understand about sustainability. So it's nice to be meeting you all now. Back to you, Sharifah.
Aiman? Yeah, Aiman, please.
Oh, thank you, Najwa. My name is Aiman, and today I'm representing HSBC Amanah in Malaysia. So HSBC Amanah is the Islamic banking arm for HSBC Group globally, and we're headquartered here in Malaysia. From a sustainability perspective, we have been quite active in that space, not only in Malaysia but obviously globally. We in Malaysian market, we've brought some of the first transactions to the market, like our inaugural UN SDG Sukuk back in 2018, and some of the other innovative sustainability financial instruments.
Norita?
Hi, good morning, everyone. I'm Norita. I'm the CEO at TFX Islamic. TFX Islamic is a fintech company. We specialize in supply chain financing, which now we are partnering with UNGC to focus on sustainable financing to incorporate into our technology tool. So we've got two technology tools. One is the supply chain financing that has interface with corporate buyers, SMEs, as well as finances. And we also have a credit assessment tool that takes all the data, incorporating to data analytics, and able to encapsulate all the data, financial, non-financial, including sustainability data for risk assessment and rating purposes. We are HQ'd in Kuala Lumpur, Malaysia.
Mr. Gurpreet?
Thanks, Sharifa. Hi, it's very nice to be here with everybody from Go ESG today. I'm Gurpreet. I head strategy here at Aspirasi. Aspirasi is a company within Axiata Digital. Axiata, I'm sure many will be familiar, is the telco multinational across South Asia and Southeast Asia. Aspirasi is Malaysia's first end-to-end fintech fully digital lender, and we serve only SMEs, micro SMEs. So some of the programs that we've rolled out, especially in the past few months as SMEs have been hit by COVID-19, include Aspirasi Assist, with ticket sizes of as low as 2,000 ringgit and a completely digital financing journey. Anyone can visit the website and receive financing immediately. So I'm excited to be here today because sustainability is baked into what we do here at Aspirasi.
Excellent. Okay. Without further ado, I think I'll just go straight into the questions to allow more time for discussion. You see, plainly seen, sustainable funding is a system approach to create social and environmental impact. How do you account for it? Are there periodical sustainable audits, for example, in the green and or a sustainability, just a primer to take advantage of the market? If I can start with you, Norita, because you mentioned about the data and data analytic tools, etc., available, in TFX.
Okay, so as much as we're in financing, we are a technology company first. So data is key for us. So with our partnership with UNGC, what we're seeing is that the SMEs now they have obstacles into getting financing. And a lot of it actually stems from data. They don't have sufficient data of where the financing are, which are the finances and the bankers. They have difficulty in getting adequate information. What do the banks need? What do the finances need, right? And also they have there are just limited offerings to the banks, and yet they don't know what they are being offered. So, and also I think the finances themselves on the other side, the whole data on ESG is so inadequate. I mean, even though in Malaysia you've got a sustainability report complementing every annual report, but there is no consolidation available anywhere. What more for the SMEs, right? So that's where we can come into data, right? So this is where the SMEs has to come into understanding where are the gaps in those data. And where fintech coming forward is the whole self-service or self-diagnose. Can the SMEs come in and self-diagnose themselves where they are in the sustainability framework, right? I think that's key. And if they can't, and this is where supply chain comes in, how do you ride on, how do you piggyback on your corporates who are there in the sustainable space? And they themselves would have data that would intertwine together with the data the SMEs have. So SMEs alone cannot work in isolation. So we come, I think Najwa knows, we come to the space of ecosystem. Data compliance, audit, and so forth cannot come in isolation. It has to be an ecosystem play. So that's where it is now. Data is still key for this space to grow. It's still very infant in this market, particularly in Malaysia. We would like it to grow as the speed of Islamic finance, and we are confident that it can accelerate to that pace, given that ecosystem all collectively and wholesomely play a role. Yeah.
What about you, Iman? I mean, because being in a bank, which is more known as more conventional compared to others, there are, is there any, new ways of banks looking at this?
Oh, definitely. I mean, we have definitely seen a transition in the market, or at least the beginning of a transition in the market over the past few years. The regulators in Malaysia, financial regulators, be it BNM, Central Bank, or Securities Commission, it's very clear that there is a clear agenda on where they would see the financial sector being supportive of sustainability agenda, and I think. I think the very important part of this transition that we're seeing is that nowadays there's more awareness to sustainability and a clear distinction between sustainability and green. If you would look back in the day, I think it was very clear that the trend within the sustainability was pretty much limited into green financing, renewable energy projects, etc. But nowadays, it's very clear that our financial institutions are looking beyond that and are looking into the other aspects of sustainability, apart from the green, apart from the one aspect of the environmental part of sustainability. So we have seen the social aspects is playing a very important role, things like human rights, employees' rights, and prosperity to the wider society and economy. So definitely there is a moving trend, and I think the future is bright in that space.
Great. Gurpreet, I would also like to know from your perspective, because SME Corp have actually collaborated with Aspirasi Axiata on the making available financing to the micro enterprise, which is the biggest segment in the SME space in Malaysia. And quite an ambitious target, whereby you've committed to max of 3 days approval, right?
No, actually 3 minutes, Puan Sharifah.
Oh, 3 minutes. Okay.
Yes.
Wow. Okay.
Yes.
I hope you'll keep to that. Otherwise, they'll come to us as well as your partner. So, I mean, share with us. How do you do that fast?
Yes.
Yeah.
So I'd be very happy to share. At Aspirasi, what we've done is we've used all the data that we can tap within our huge telco network and as a sister company to boost the largest homegrown e-wallet within the e-wallet network to develop an AI credit model. So it uses artificial intelligence to score based on e-wallet transaction data, behavioral data, performance data. And using that, we can then assess the credit risk differently to maybe traditional credit scorecards. Precisely to your point, Puan Sharifah, in fact, this really helps with sustainability because a lot of the micro SMEs that we and even SME Corp meet do not always have that detailed, what we call credit file, a thick credit file, traditional credit file. So whether that's old bank statements or transactions going back many decades, some of them may be, in business for less than a year. Some are even unregistered small businesses. So this can often count against them in traditional financial institutions, and that's what Aspirasi wants to solve. And we've been able to provide more than, under that program, together with SME Corp, provide more than 7,500 loans in less than 3 minutes, to your point, Puan Sharifah. So we use that AI-based model to score them rapidly and give them a decision immediately.
Excellent. We'll keep on checking on you, by the way. All right. Thanks. I think now next I'm just gonna go, and tap your experience, Lani. Whilst the cost of enabling funding for SME is important, supporting enterprises to reach scale brings significant economic and environmental benefits, and will lead to faster return on investment. What kind of support are funders providing, if any? Do they subsidize training, preferential treatment on procurement? What is it? What kind of facilitation can they provide?
Yeah, so I can only speak from my experience working in Indonesia, and hopefully soon it will be scaled up at the Asian level. Yeah. From the Indonesia perspective, we got the funding from bilateral donor, in this case the Swiss government, SECO. So basically, we provide free training for the SME, including some of at the micro level actually. to understand about sustainability aspects of business practices, because some of these entrepreneurs are new. They are not familiar with the terms of sustainability. Most of them already practice sustainability, but it's something like, oh, I did it. It's not something new. It's not something from the the other side of the world. So basically, what we help them is how to communicate better. And like Ayman say, in Indonesia, we also implement sustainable finance policy. The financial regulator chase the banks and all the financial institutions. I think coming up soon, the fintechs, for them to declare that they are actually practicing sustainable finance. So for the SME that will access loan or financial support from this all financial institution, I think it's good for them to start speaking the same language, the same terms on sustainability. So the support is about awareness. We provide support also in capacity building training. In the beginning, because it was so hard for the MSME to understand the concepts, we even, let's just put it, write them the first draft of the sustainability report. But then over the year, I think within 1 year time, it got popular. It scaled up. So now we actually have trainer to be able to train people. Before we have to do it on our own, but now people are learning, and then they see that it is something that is useful for them. So it's not something that is difficult as when we began 1 year ago. So it's a very nice
So,
topic.
sorry, Lani. So GRI itself do not provide funding. You just facilitate funding from other sources, or do you provide direct financing to the SMEs as well?
We don't do the financings. What we do is we provide the training, and then so that they will be able to easier to access finance. So some of the partners that we have, it's because they have we call it company profile. They have a document. So when they want to go to exhibitions, or they want to be when they get approached by buyers, they have a much more concise report that they can show, and it's easier for them to access support, including financial support. That's what we get back from some of the participants that we have. So we don't do the financing, but we help them to access financing easier. Yeah.
What about you, Gurpreet? Because being the largest telcos, and as you rightly pointed out, with existing network within your own group as well, from your existing client base within the group as well, would you like to comment about the scalability of this?
Yeah. So actually, good question. And like Ms. Lani had pointed out as well, in fact, the challenge can often be not on providing a solution. I think a solution all of us have in different forms. The challenge can be in the discovery journey for SMEs. So for micro SMEs to know about this solution, like Puan Lani was saying, and for them to be able to apply or equip themselves to apply. What we've tried to do here at Aspirasi is we've at all times thought about the digital journey and making it as simple as possible for the end consumer. So we pre-populate the journey, or we take data that we already have with them. But still there are challenges. So there's a trust factor that's very important, especially when you're dealing with micro SMEs, because they're worried about scams, they're worried about theft of information, they hear about a lot of online fraud. That's a big issue that we need to deal together. And then the second thing that they're worried about is also lack of transparency. They're worried that in future there's something that comes back to bite them. And they've had that experience before, maybe with traditional lenders or in old school. So when we say sustainability, we really need to think about the lender thoroughly, and we need to think about the reputation we build up with the borrower.
Right. Ayman, from your perspective, what's the gap between the needs of sustainable finance and existing or conventional financing?
Sure. I think I'll get back to a point that I mentioned earlier, which was number one, it was a perception in the market between what is sustainable and what is sustainability finance. And I noticed that there was a heavy over reliance on as I mentioned, on clean energy projects and these being the best practices in the market when it comes to sustainability with you know, and it left like a big area in sustainability market neglected. So, you know, and definitely the SME part, while there was always, you know, an SME package of financing, those SMEs were always targeted for financing, but it was never really, you know, being looked at as an actual sustainable finance. And for that, we have seen like even the product suites that are currently being developed in the market, there's a major shift initially with a great focus on you know, on capital markets, on syndicated loan markets that are accessible only to large corporates. Nowadays, I mean, for the work that you know, Norita is doing in supply chain financing, for example. So now you know, these actually allow you know, the SMEs to come into the picture, not only from a financing perspective, but also from a sustainable financing perspective. And what that enables and helps these SMEs to do is to realize that for as long as they embark on their sustainability journey, now there are additional funding pockets that are willing to help them and assist them. And in my point of view, that was the biggest gap in the market, which was a factor, or it was a function of perception and market education on what is sustainable finance. And eventually we're now seeing the transition from a product offering perspective, from not only from traditional you know, financial sector, the banks and financial institutions, the bank and financial institutions, but also from the upcoming fintech providers.
Great. Lenny, I would like to go back to you because I know, you know, if we thought 1 million extra, about slightly more than 1 million SME population in Malaysia is big, it's like almost 50 times in Indonesia, actually. So, in the experience, in your experience in Indonesia, is there a difference between, I mean, in the case of GRI, do you just focus on sustainable finance, or do you do other micro financing as well? And what's the difference between the two?
So we work with micro and small medium enterprise. We also work with big company. So we build their understanding or their awareness on what is the sustainable finance is all about for company, either small or big. There are some similar challenges and there are some different challenges. But the same thing is about data collection. So a lot of companies actually have data, but they don't collect the data. And then it's about framing the program, the data, and their achievement in a structured way so that it makes sense for everyone who wants to learn about the company. So that's one of the common challenges, either small or big. But then in terms of access, I think in this case, with the COVID, it's actually bring an easier access for the micro and small medium enterprise. Everyone wants to save the MSME. In Indonesia, we have the state-owned enterprise is actually instructed to start, let's just put it this way, recruiting the MSMEs in their supply chain. So yeah, so that's the current development.
I see. If I can go back to Norita, what are the clear advantages for SMEs or businesses, you know, to go for sustainability link financing? For instance, do they get lower interest rate, longer repayment schedule? What's the benefit of tapping on, you know, going sustainable? You need to unmute yourself, I think.
So you've got two different type of SMEs, right? You've got the one that is called SMEs who are performers, sustainable performers, and one which is sustainable innovators. So the ones that are sustainable performers are the ones having difficulty going to the banks in Malaysia, because the banks are so large that when they did the sustainable financing, they've done it so structuredly that it was very corporate centric. Now they're transitioning to SMEs, and you cannot assess, you cannot look at SMEs the same as you look at corporates, right? So, but the ones that are easy to get financing are the we call them the sustainable innovators. What it is essentially they are just building creative and innovative sustainable products and services for their anchor buyer, right? For their corporate buyers. So this is where supply chain financing comes into play perfectly during this transition where we are evolving from corporate-centric sustainable financing to SME. So how supply chain financing works generally is if you have a corporate anchor, the financer can come into financing the vendors by pegging or piggybacking on the corporate buyers. That means a financer doesn't look at the credit worthiness of the SMEs. They don't credit assess, they don't credit score the SMEs. What they do is they look at the investment grade and credit assess the corporate anchors. So if the corporate anchors has a sustainable framework, hence that's a great advantage, right? So the vendors essentially can come into a sustainable financing program. But again, in order for an SME to enjoy better rates, this is why the reason why we want to bring SMEs into the picture, because they enjoy better rates. So hypothetically, say the SME gets trade finance rate of 10%, they could be enjoying about between 0.2 to 0.8% discount if they are considered eligible for the sustainable financing framework. So in supply chain finance, if the anchor buyer has a sustainable framework and they, together with the SME, enter into program, these SMEs could enjoy a discount if, as I said before, self-assess and self-diagnose themselves to show that they have some data of improved efficiency in producing those products and services to the anchor buyer. So supply chain is still very much buyer-led. So the recourse, the default is entirely on the corporate anchor. So the SME comes in, they don't have to worry about their credit worthiness. They don't have to worry about, oh, my record the last 2 years is not doing well. It's moratorium, it's pandemic, I cannot get financing. They don't have to worry about that because they are latched to a good, sustainable corporate anchor. Yeah.
Right. I hope the SME vendors are listening in today. Would appreciate that the availability of such services, and they get in touch with you as soon as possible. I mean, it's a real issue actually that you set out to solve. And Aiman, can I just hear from HSBC Amanah's perspective about the difference between those that go sustainable and vice versa?
Yeah, sure. I mean, to echo a couple of points that Partner Rita had mentioned, now the development in the financial products offered from a sustainability perspective is definitely happening. So now the development of sustainable supply chain financing or sustainability-linked loans, for example, which they assist corporates and SMEs at the same time to look deeply into their sustainability journey and have a bit of a financial benefit out of it. Now, obviously, it is not it's not merely the financial benefit that should be the driver, for the uptake of these products. Rather, it's the wider sustainability journey, and then the financial products would always be complementary into that decision factor of the trade-off between going for sustainability and embedding sustainability as a strategy for growth and creation of value and competitive advantage, rather than focusing only on a basis points of from a transactional perspective. Now, when it comes to the assessment and how do we view companies or corporates or even SMEs that are embedded in sustainability and are not, for example, in HSBC Amana, we aspire to be the first sustainable bank within HSBC Group globally, and we are very proud to be embarking on that journey here in Malaysia. Part of that, what it entails is that when you look at companies, or you look at clients, sustainability definitely becomes a factor. So, and this is not only in HSBC. If you look at the wider market, and the push from regulators is to start to look into things like the climate impacts and the social impact that companies do actually have, on the society, on the environment, rather than the focus on only credits. And we already started to see this having a bit of an impact, a positive impact on clients, even when they go to, for example, in the capital markets, which is still at a very early stage here in Malaysia. But we can already see from a couple of the issuers, for example, who you can already see the difference, the tension in pricing between their regular issuances and their sustainable issuances. And while this is happening at a corporate level, what happens is that this eventually will cascade down through all the sectors and the different sizes of the companies within the economy. And as I mentioned previously, the regulators, the large corporates, through sustainable supply chain financing, and the financial institutions through the various initiatives and market trends, are also pushing into that direction and creating that supply element in the market.
Right. Nurita, I know you do other financing, I mean, beyond sustainable related, especially among those vendors, etc. You look beyond sustainability as well. What are the the most distinct, differences in the criteria of sustainable financing compared to conventional financing?
Okay, so this is where we come from an Islamic perspective. So HSBC Amana can relate to me. There's a lot of overlapping synergy, harmony between Islamic and sustainability, which is why you see that a lot of finances, when they want to embark on some sustainability financing and they have Islamic wing or Islamic company, they will start from them, because there's a huge overlap. So to answer you, Najas, from where we come from is that, the whole Islamic and sustainability, where they intertwine, where they are complementary, are basically four fundamental things. Protecting life, they both have the parameters of protecting life, developmental goals, value creation. They all looked at how to increase social principles, right? And fourthly, they both do exclusion screening. What it means is that for Islamic, we look at businesses that are prohibited based on principles of Sharia. And for ESG, they looked at businesses that is not aligned with the ESG criteria. And a lot of people are saying that Islamic doesn't look at environment, which is, I totally disagree, because I think that you get Islamic finance harmonized in environment, because one of the principles of Islam is that man has a role to steer over divine creation. So there is that, right? So how we do it with at our technology hub is we look at the integration of Sharia principles and ESG at the business level. Okay, so we use our credit assessment proprietary technology platform. So we focus largely on risk mitigation methodology. First, of course, we look at if it's is the business financing being sought is Islamic principles in nature, right? We do negative screening on the onboarding stage, look at the principles of financial, social, ethical, governance, and factors. Then we look at where the ESG comes in. If it falls into high sector, then we can enhance the sustainability risk mitigation process application. Okay, but if it doesn't fall to high risk sector, then the basic sustainability will just apply. So for us, being in the sustainable financial space as an enabler, it's just an extension. So what our credit assessment tool basically takes in the qualitative and quantitative data into the rating. So it is up to the SMEs to come to us, usually they have worked with the anchor buyer, or they would have worked with a framework developer or framework enabler such as UNDC to say that these are the factors that I have, and I self-diagnose myself every quarterly. And we put it in a credit assessing tool where our data, we have our, we're able to tweak our weightage scoring and balance it against the other qualitative and non-qualitative factors. And that is where we talk to the finances and how their risk management works, right? So so this is how we go about with sustainability financing. We looked at it as an extension of our Islamic finance principles.
Right. Thank you. Thank you so much. That's very clear. Ivan, as we know, in the case of Sharia financing, at least in Malaysia, there's usually a panel of Sharia advisory council, right? That's assisting the bank in doing the assessment. How does it work for sustainable development? Do you have a separate panel of advisors, or do you get your staff trained? How is it done, and what's the pertinent criteria, the difference between the a sustainable financing compared to other conventional financing that's provided?
Thank you. So it's actually a combination of all the elements that you have mentioned, and it depends. Obviously, it differs from product to another. It also depends from a client segment to another. For example, from a Sharia perspective, we remain bounded by a Sharia committee at a bank level that obviously looks at all the different commercial, non-commercial aspects of the bank's business. At the same time, with the introduction of the VBI, value-based intermediation initiative by the central bank back in 2017, this definitely there are many guidance papers that have gone out in the market that organize and actually touches on different aspects that banks look at when when they're assessing the different sustainability products and portfolios. For us in HSBC, we also ride on our global capabilities, where we have recently at a global level we have announced the creation of an ESG team, so for example, here in Malaysia we have extensive coverage by our colleagues in Hong Kong, who help us and allow us to look at not only the different transactions and different products that we work on here in Malaysia, but also allows us to bring a little bit of the innovation that is happening in other parts of the world, and be able to bring that to our clients and customers in Malaysia. So that obviously, on top of that, we do have a team here in Malaysia that looks at it, that looks at sustainability, that looks on how we can embed it not only from a financing and from a product proposition perspective, but also from an internal framework and a governance perspective as well.
Right. Thank you so much. Just quickly, Lani, since you work with different players and financial providers in Indonesia, can you just summarize, the difference in the criteria of conventional and sustainable financing in Indonesia generally? Thank you.
Okay. So actually, for sustainable finance, all MSME is so any support to the MSME is actually sustainable finance. So it's not that complicated for big bank. But once you are above the medium level companies, when you want to tap into the sustainable finance portfolio, you need to prepare with your ESG report, or in the case of JERA, we call it the sustainability report. So you need to be able to say how you practice your environment friendly and socially responsible business to your financial, something like that. So it's different. So basically, for MSME, as anyone who finances MSME is considered as sustainable finance practice. But if you are a big company, you need to do your ESG reporting well, and we'll be able to declare, hey, I'm a sustainable business practitioner, something like
Right. Is there certain incentives provided by the government to this providers of sustainable financing?
That's interesting. Actually, I don't think we arrive at incentive. They are thinking about it. So some supporting regulation is being prepared. But for example, right now, if companies want to turn into a solar panel or electricity-based energy, right now the support is just lower loan rate. That's all. But in everything else, I think they are working on it. So it depends on the banks. Sometimes they provide we call it sustainability link loan or something like that. It does like Norita said, provide lower rate loan rate.
Right. Right.
But then the
Okay.
government is still work in progress.
I mean, from experience, actually having a party like yourself, a coordinator like GRI, what you are doing is very useful, because for SMEs, each and every one of them are small, but together they're big. And when there are parties like you that assist them, that can make a difference to the bargaining power, the collective bargaining power to the SMEs. Yeah, right.
Yeah.
Gurpreet, just out of curiosity, how do funders, especially in the case of Aspirasi, when you focus so much on the micro enterprises, right, which is very good, the approach, the inclusivity approach is noble, but how do you ensure that the capital continue to flow, the repayments are made, and assistance are rendered to especially the micro enterprises, and to help eventually scale the enterprises while minimizing the risk of NPL, non-performing lending loans?
Yeah. That's a great question, actually. And it's one, in fact, that all fintechs, I think, have been thinking about, especially as they are tested through this recent global economic crisis, with the global health crisis we're dealing with, right? So you've seen, for example, in North America and in Europe, a lot of fintech lenders have become mainstream, and governments have used them to disperse a lot of the emergency funding that they need to send out to SMEs. But exactly as you asked, Puan Sharifah, the flip side of the coin is what happens when it's time to repay. What we've seen and the approach that we take is that we don't see ourselves as just a replacement for one arm of the services that SME needs. So not just the financing arm. What we try to do is embed ourselves with the SME to serve all of their needs. And this may include, for example, payments, which we do on the e-wallet side. It also includes other SME services. For a micro SME, it includes digitizing them, showing them how they may need payroll services, how they can get HR services very cheaply, advertising services. We can help them with licensing. When something like that happens and you become so deeply embedded with the SME that you can help guide the payment flows to them and offer them financing strategically and tactically based on the data that you're seeing. So you're helping them grow and you're not giving them too much or taxing them. You're providing insurance coverage just in case something happens. That minimizes the risk even on the financing side. So that has helped us substantially. Where we're deeply embedded with an SME, we see that the NPL there is extremely low. So we go in together with the full ecosystem. But where we don't have a strong relationship with that SME, then exactly as you asked, Sharifah, we're at the mercy of broader macroeconomic factors. So if there is a downturn, then we do see some stress to the NPLs there. So we think that is one solution. I think a second solution is diversity. So what we do here is we work across sectors. So we work in F&B sector, we work in other sectors, and we move and shift the portfolio according to demand. An example is during the pandemic, we saw a major hit to the retail sector. Retail sector suddenly saw a lot of customers. People were lining up at supermarkets and the supply chains could not cope. They were seeing a lot of traffic come through. So it was our chance to step up and offer them an immediate financing solution. That's the way I think that you balance the load. There is always a winner, even if sometimes that means there is a loser.
Right. Exactly. I mean, the speed matters. I think you're giving, sorry, Eman, they're giving this, fintech players, they're actually giving pressure to the bank. Good competition, good for the SMEs at least. I'm with an SME development agency. So this kind of healthy competition is good because we know that usually in the past, especially banks take so long to disburse financing. The application is complicated enough, and then it takes time to be processed. And in the situation of crisis like this, every day, every second counts. Okay, I'm going to take some questions from the participants. This will go to all, but I'm going to start with Lenny. At the moment, sustainable financing is made attractive with incentives, but you said there were no incentive from the government at the moment. It's mainly, by the providers themselves, right? In the case that you mentioned earlier. But how can the uptake be accelerated, and banks, or in this case, all of you, the platform, the financing provider, make ESG disclosure mandatory as part of mainstream approach? I mean, what do you think can increase the take up? Lani, if I can start with you.
Okay, so in Indonesia, it's actually mandatory for all financial service institutions to prepare a sustainable finance action plan. And then every year they need to issue the progress report in a sustainability report. So with that, actually, I see the rise in banks and other financial service institutions. They are starting to catch up and learn what is this sustainable finance is all about, and what does it mean for banks or for financial service institutions when they want to say or they want to claim that they are practicing sustainable finance. So becoming a regulation and making it a mandatory is a very good push in Indonesia case to start people to do these sustainable finance practices. I think it's commendable. The incentive is not there yet, but the banks and all the others are starting to learn. So actually now the growth is on providing service to learn about sustainable finance. That's why that's
Oh, excellent. Peer pressure, mandatory disclosure create peer pressure when they look at the other banks doing better, right? Does it work that way, Aiman? What's
Well,
your
I
comment?
mean,
What would make banks more excited to allocate your portfolio, your portfolio funding to channel it more towards sustainability and to create demand as well from your target audience? What do you think need to be done?
Sure. I mean, before I jump to that, at least from a disclosure perspective, I think we sit a little bit more on the comfortable side of the table on that. So for us in HSBC Amana in Malaysia, even though the VBI disclosure is something that is optional at the moment, we actually do abide by that disclosure, and it's publicly disclosed. So we speak about the different activities that we do as an organization. We don't limit it only to to sustainable finance, but also from a governance perspective, our future plans, etc. And what we know that what this thing actually, the reason why this is beneficial, because it creates that sense of accountability that, look, it's not that something that you just discuss behind closed door nobody knows about. We go out there and then we disclose it, not only from parts of our VBI disclosure, but also as part of our UN SDG Sukuk that we have issued. That there is an audit for that, and there is a disclosure to that as well, not only in Malaysia, but we issued SDG bonds at a group level as well. So we're definitely into that in that direction. And I agree, it definitely, not only from a competition perspective, but it's mostly from an accountability perspective. Financial institutions and banking financial institutions are systemically important to the economy, to the financial system. And if we really want to take the sustainability journey seriously, it starts, with this building block. The overall direction in the industry, I think, is pushing towards that as well. We will see how that is going to progress in the future. But as I mentioned, from our perspective, we take that commitment, we take that accountability, and we go for the disclosure.
Right, great, voluntary disclosure. What about in your case, Nurita? I mean, how can you how do you see we can promote the uptake more? More supply of sustainable financing and demand for sustainable.
Okay, so I
business
come
and
from a
financing.
background that is very much ecosystem driven. I think Najwa knows that. So in the last 5 years, we have seen 2014, where I came from, digital space was very infant, and how the ecosystem came together, right? So, and how it has gone to a very high growth stage. We see unicorns in Malaysia, coming from Malaysia. We never did that last 5-6 years, right? So, but again, in this case, I think banks cannot do it alone. They cannot be one player demand, one player supply, right? So you have to understand what are the factors that propel this sector, right? So in this case, how can the ecosystem players come to accelerate? So you've got the regulators, the NGOs, technology enablers. So how do they come into a connected, trusted, and network approaches? This is the only way to go for a sector that is an infant, and I call sustainable financing is still at an infant stage, right? So, but then you have UNGC, they are actually, I call them a catalyst, where they come with a framework where if you're sustainable, you feel like sustainable, come to us, we will literally help you craft it and make it endorsed as a sustainable framework. So they are actually a segment there. So, and then this is where also, looking at debt market, the green bonds that are available, is there sufficient green bonds that the government is funding to the SME loans? Is there sufficient asset-backed investment products that is targeting towards social, environment, and financial returns? And do you look at a seed grant, business advisory from parties like you, SME Corp, is there enough crowdsourcing from the private capital, PE, VCs, and then even like guarantors and green insurance coming into space, right? But having said that, when an ecosystem comes into play, it should be as agile as possible. I think coming from a space where, if digital is agile, there are no regulators, but sustainable is all about standards, right? There's just so many standards by the regulators, standards by UN, and then the global space and all that, and that makes it costly, right? In an ecosystem where you need to accelerate, you cannot impose cost. You need, the sustainable SMEs to get the right machine, because that's the one that's been standardized. Primary producers have to have the right way of producing crops, because that's a sustainable way. So in an ecosystem that needs to propel, accelerate, that comes to an equilibrium by all partners, by all players, it cannot be costly. I think this is where you will see the ecosystem will take on even slower, which is why players like us find ways as a transition. Supply chain, one, where we can bridge the gap, where SMEs can still take financing, peg on something that they cannot give. And secondly is, where is it an extension of Islamic finance, so that we do not look at assessing the SMEs based on just new standards, new framework, right? It's an extension work. So what I'm trying to say is that we've got financial folks here, we've got HSBC here. What we like to see is also, while everything is done currently with ecosystem, banks should take the next step. While you are looking at very much, historical way of standard banking credit assessment, you take in factors into the credit assessment, you have to move towards looking into how these SMEs in future are sustainable in their performance rather than looking at historical. But again, then there's an issue, right? The banks, while they want to look at a long-term impact, then the SMEs come in like, oh, I come in because there is short-term return, I want to pay the banks quickly. So I think all that conversation continually has to take place. Yeah, a long way to go, but can be done.
Right. Quickly, if Aspirasi, from the perspective of Aspirasi, right? What do you think? I mean, it's already, I think it's quite impressive, your achievement within, just one short month. I mean, our collaboration is very new, and you mentioned that there's already 7,000 approval to date. So what more can be done, Gurpreet?
Yeah. So I think I would come back to what I was talking about earlier in the session, which is the discovery journey for micro SMEs. What Sharifah, you mentioned there are up to 1 million micro SMEs. Some statistics that SSM and MEDAC, the Ministry of Entrepreneur Development and Cooperatives, have recently put out an assessment for the unregistered section of merchants. So individuals that are acting as SMEs but have not had the time or the financial resources to register can be anywhere between 2 to 500,000 individuals. So that's quite substantial. And that entire base of people struggle to get financing. If they get financing, it is only from friends and family or from personal networks, and that might be Along, for example, which is very exploitative, or they get personal financing from a bank, so not business-related financing. And what we'd really like to do is, yes, we spoke about 7,000, and actually Aspirasi by itself has done tens of thousands of loans. But that is just the tip of the iceberg. We're only scratching at the surface. We'd really like to provide a meaningful solution for all of these merchants, these tens of thousands or hundreds of thousands of merchants. And I think the only way that can happen, but that we've learned in a digital business, once you've developed that critical mass of adoption, so you have an understanding and broad-based knowledge that this is safe, this is okay, I can do this, this is backed by the government. It might be Aspirasi, it might be some other company, it may be many other companies. Ideally, we'd like many others to come to the fore. And then it becomes a normalized practice for micro SMEs to do so. So come online whenever they need financing. They're not afraid of it. They don't need to be terrified, even if it's something new for them, and they can do so. So I'm encouraged by what's happened. This pandemic has forced all of us together with SME Corp, MEDAC, to start thinking together with SMEs. Even DBKL, for example, has started thinking very digitally. So we don't need to register with SMEs in person or charge them anymore. We can do so for free. So that's something that's really going to help all of these SMEs.
Right. Great. Thank you so much. Quickly, just to attend to the last question and also a closing statement for you, Aiman, before I try to make time for the rest. There's a question about for you to comment about the Sukuk guideline, ASEAN and local and regulations, specifically Securities Commission regulators, specifically Securities Commission Sukuk guideline in relation to sustainable Sukuk musyarakah. Musyarakah or musyaraha?
Musyarakah,
I think,
yeah.
no? Yeah, musyarakah, yeah. So, quick comment, 1 minute, Aiman.
Sure, thank you. I'm aware of the time, so I'll keep it really brief. As I mentioned at the beginning of my comments, it's very, very good for the industry and for all the participants and stakeholders in the ecosystem that sustainability is at the front and center of focus of the regulators in Malaysia, be it a Securities Commission or BNM. Now, in the capital market space, we have seen the Green Sukuk initiative, that was established by BNM and Securities Commission, and what that allowed is that it had given incentives to corporates to go out there in the market, for example, and had given financial benefits for them to go out there and issue green sukuk. It also had given a framework and a set of standards for these corporates to go ahead and comply with, which is very important, especially when it comes to capital markets. We have seen the fruition of that. As I mentioned earlier, we now have a few case studies whereby we can compare the pricing tension of some of the issuances that were done, same issuer around the same period of time, and then you can see the differential in pricing for the green and or the sustainable and the conventional issuance. And for the time being, it's still quite small, but there is a difference, and it is only going to build up from there.
Right. Okay. We're really running out of time, but it's very delightful to see that data. I think collectively, from what you've shared, data has actually enabled, and digital footprint, I think, especially has enabled a more inclusive and tailor-made solution for the SMEs as well to be included in the. For sustainable financing. So I thank all of you. I think very good sharing. I learned a lot. I welcome all of you to share, your promotional material with us so that we can help, make known your services to the SME. So do get in touch with us and provide the e-flyers, etc., so that we can help create the awareness as well. Thank you so much to all of you, and thanks to the organizer for having us. Thank you.
Thank you, Najwa. Thank you, everyone.
Thank you,
Thank you.
everyone.
Thank you, everyone.